And you don't have to be the rehabber or the landlord. You can come in, do your inspection, and then close on a property that's already been renovated. It's already performing, and you can cash flow from day one. And that's what we've been doing for the last 18 years.
Nice, man. I love it. That is a tried and true strategy. It's just buying those cash flowing properties and keeping them in your portfolio. Cash flowing properties, though, where I live here in Seattle, that is a myth. And so tell me, where, whenever people talk about buying turnkey rentals, something that you don't have to add value to in order to see the profit, I'm always like, where are you buying these? Because there's nothing up here in Seattle. So what are the markets that you look for when you're looking for turnkeys?
The residents of Seattle are precisely our ideal clients and our ideal target market. Our clients are largely based in expensive markets like that, like California, like New York City, like places where there's no possible way you're going to get a reasonable cash flow on your property, and it's going to be exorbitantly expensive to buy it, right? So what we've done over the years, and I told you we've been in the game for a long time, we have the ability to operate in different U.S. real estate markets, right? And so at different points over the last 18 years, different markets have been more or less advantageous for real estate investors. And we've been able to help people buy in over a dozen different states. So right now, when we're recording this interview, a lot of the markets with the best cash flow dynamics are markets like Kansas City, St. Louis, Cleveland, Indianapolis, those types of markets, because when you look at the price to rent ratios in those markets, and then you also look at how low the property taxes and the expenses are and all of that, what it allows you to do is buy a turnkey rental property. So you are leapfrogging over all of that upfront risk that's involved with stabilizing the property and not collecting income as you're holding it and renovating it and doing all that stuff. You get to let somebody else absorb all that risk. You just come in at the end, inspect it, appraise it, do your due diligence, and then close on a performing property. And the key here is that you're able to buy a cash flowing property that positively puts money into your pocket from day one. So you're making money when you buy, and you're not needing to speculate on future home price appreciation and have that be the only way that you can make money. Because as soon as you buy and hold, right? If you're buying to hold and not to flip, all of a sudden that now activates 5 different profit centers, because you've got the potential for market appreciation. You've got the cash flow coming in every month after your tenant's rent covers your expenses. Your tenant's rent is also covering your mortgage and paying down your mortgage principal. So that's a third profit center. And if you're buying to hold instead of to flip, now you've got the most tax advantaged asset class in the United States. You can depreciate the structure of your property. You can do 1031 exchanges when you sell and defer all your capital gains tax. You can do all of that. And this is an important one, and probably the least understood profit center. When you buy to hold, you can actually profit from inflation, because home prices rise with inflation. Rents also rise with inflation. And if you borrow a 30-year fixed rate mortgage in today's real dollars, you're paying them back in future diminished nominal dollars. So instead of inflation destroying your wealth, as it would if you kept your money in a savings account, now inflation is debasing your debt, and it's pushing your home price up and your rents up. So you've moved to the other side of the inflation equation. You can profit from that as well.
Yep. Those are all great reasons to be investing in single family for sure.